Paul, given that I know so many people are waking up this morning and they're turning on their TV and they're thinking about tariffs and trying to understand what's happening. As I said, there's a market sell-off literally happening as we're speaking. And so I want to get there with you just to understand what's going on, even inside your own firm, as you're thinking about it this morning.
Well, there's so many moving parts and there's so many things that are cross currents. The one thing that I would say is this is a completely, totally different landscape than Trump 1.0. So if I go back to January of 2017 and I look at where we were in the three big asset classes and where we are today, wow. It's a much, much shakier ground that we're treading on. For instance, let's take fixed income. In 2017, we were asking the investing public to pick up $1.2 trillion worth of duration. That was how much we were issuing at the Treasury. This year, that number's $2.7 trillion of duration. So that's just, it's an all-time record. So that's a completely different landscape in terms of the bond market. If I go to the foreign exchange market, in 2017, there was $8 trillion that foreigners had invested in the United States, more net $8 trillion that they owned more of us than we owned of them. That was 40% of GDP. Fast forward to today, that number's $23 trillion. Foreigners own $23 trillion more of U.S. equities and debt and real estate today versus 8 in 2017. That's 80% of GDP, twice what it was. And again, it's a good problem because it shows that American exceptionalism has drawn that capital in. But we have to be careful. And then finally, if I look at the stock market, January of 2017, kind of average PEs were around 19. Today, they're 25. We're a full 30% higher than we were in 2019. We could have a 30% correction in the stock market and just be back to slightly overvalued. So Trump 2.0, I think Trump being Trump, I don't know if it will play as well as it did in 1.0 because there's no room for mistakes. And look, he's my president now. I pray he makes all the right decisions because we are precariously perched from a macro standpoint. I don't think we've ever had as many things that are connected and circular and could go wrong. So it's going to take a maestro to pull this off in a way that kind of preserves where we are now in the major economic the major asset classes.